Friday, January 9th, 5:46 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We just completed the first full trading week of the new year. Congratulations. Give you some insight. First look here. This is a watch list on the top left of the stock indexes. They closed green. That simply means for the day, they closed higher from the price they opened. Below this watch list, that's the 11 sectors of the S&P 500. Same thing. Reflects the price that they closed from the open of the day. So if it closed green, means closed above the open for the day. First, if it closed red, it closed below the open of the day. Look at these 11 sectors. You have a green stock indexes. You have several indexes that close red. Divergency. And each of those sectors have industries in them. Give you some more information. Since we're in the first month of the first quarter of the year, we're going to have earnings. Some companies will have earnings this month. Some will have them next month. That would be public information. You can see from the regulatory exchange the accounting numbers. But on top of that, last month, you have many people closing stock positions for tax purposes. And also they want to get out of losers. On top of that, the last week of last month and the first week of this month, you have people that are doing dollar cost average. Typically, they have money withheld from their income, payroll, and goes into some companies use 401ks. Some people put them in IRAs. And if they're government employees, they put them in different financial asset names. But again, they are investing in the long-term investments, dollar cost average, where they are typically doing monthly withdrawals from their payroll and having another company managing that. Not always in stocks. Some of them put them in bonds. What that does is brings a lot of money into the stock market from those companies. So that's a big splash. So what happened partly this week is a lot of cash went into the stock market because, again, those mutual funds, they have mandates where they have to be a certain percentage invested in stocks. So that's a big amount of splash. That doesn't mean those companies are solid next week, next month, or necessarily that they're buying because they think they're going to do better in earnings. Again, they're buying what they speculate are better than other companies. Well, that being said, you're paying them a fee. You could do better on your own. See the watch list on the left? Those are all stock symbols, and you could buy them, and you can outperform the institutions that manage other people's money. Enough said on that. Look at the major indexes and then the sectors. 5-year chart. Each candle's a week. The S&P 500. We have a gap here that has not been filled from last year yet. Green horizontal line. That was a key level. We haven't tested that yet. And look what happened this week for new high. So again, that was the high of last year. We broke that a few weeks ago, that yellow horizontal line. I'll remove that. And here's the high this year, trading above the high of last year. Okay, that's the S&P 500. 500 being 500 largest publicly traded companies. We'll break that down shortly so you can see the sectors in there. Just take note, we made an all-time new high. Green, higher high, higher low. Now we're on the NASDAQ 100. That's the technology stock index. We are still below the highs of last year. It's underperforming. That's sad. Okay, we broke above the high of last week. Here's the high of the year. It's underperforming the S&P 500. The Dow Jones Industrial Average, one of the oldest stock indexes. This week, we broke above last year. So looking back here, again, the S&P 500 broke above the high last year. The NASDAQ 100 has not, but the Dow also has. Again, the Dow, only 30 companies, very diversified index. Big body, big strong body. The Dow transports. Interesting. We broke above the high of last year. Let's remove that. 2024, we broke above that high. It took long enough to get out there. Look, 2021, we broke above that. That's a lot of occurrences that happened in the Dow transports. But the NASDAQ 100 still hasn't taken out the high of last year. Amazing. That money is going into transports? Really? Okay. Transports being, give you some insight, Federal Express, UPS, airlines, shipping, trucking companies. Yeah. The Dow Utilities, no surprise, still below the highs of last year. There we are. And the Russell 2000, we broke above the high of last year. Can you believe that? The Russell 2000 is outperforming the NASDAQ 100. NASDAQ 100 is big technology companies. What used to be leadership has changed. Now let's go look at the 11 sectors S&P 500. They each represent a different percentage of the S&P 500. Technology, similar to the NASDAQ 100, still below the highs of last year. Healthcare, look at that. Outstanding. Took out the highs of last year. Took out the highs of 2024 also. Again, mentioned this several months ago, that there was a lot of money flowing into healthcare, the stocks. No surprise. It's outperforming the NASDAQ. Do I? This month, Congress is working on a bill to either do more damage or improve affordable health care. If you don't follow the House or the Senate, Congress, you may be very uninformed. I'm talking about following the direct sources, public information. You go straight to the Congress website and see the bill instead of hearing some degenerate TV or radio talk host. There is a certain group of lobbyists, evangelists, they're pushing Congress to defund funding abortion. The president made his comment on that. Say, just pass it, get it through. And again, there's several other things going on there, but just to point out that one thing. So that one thing has delayed many things because a certain group of people want to tell people how to live their lives and defund it, or make it a criminal too, a certain state's criminal. It's just funny, very funny. Again, those people that write those bills and support those bills are opposed to one thing, but they're definitely doing other unethical things. Yeah. Hypocrites. Very entertaining. Okay. Enough of that. Just facts. Again, end of the year, the last Friday of this year, we have a bill that has to be signed or the federal government shuts down again. That's not done yet. Financials. We took out the highs of last year an all-time new high. I had several people ask me about this. Again, financials is a sector. It's not just banks. The financials include insurance, banks, brokerage companies, credit card companies. So again, a sector is the higher echelon, and below that are industries. So you have some industries within the financial that are weaker, and some are stronger. Give you an example. You have also big brokers, big institutions. Let's say JP Morgan. They own Chase Bank. Again, it's more diversified than Goldman Sachs. Goldman Sachs is less diversified, big financial, where JP Morgan is much more diversified. And then you have Charles Schwab. They're a broker, but they're also banking and other services. And then you have other companies that are brokers and insurance, and other ones that just do sell funds. Consumer discretionary. We took out the highs of last year. Communication services are still below the highs of last year. Industrial. We took out the high of last year. Can't look at this gap down here. Consumer staples. Way below the highs of 2024. That's a shame. And energy. No surprise. Still below the highs of 2024. Still below the highs of last year. Utilities, still below the highs last year. And real estate, yeah, way below those highs. I might make a separate video of what's going on with the policy the president wants. He announced it. I've already shared several of that on my Patreon members regarding the insight mortgage companies, trade ideas. Real basic, real basic. He wants to use taxpayer money, aka government money, but taxpayers' money to bill out financial institutions that write mortgages. Some of those mortgages they write, of course, are different interest rates, lower interest rates, so they earn less money. But right now, interest rates are high. I definitely should make a video about that. Interest rates are still high. So they have less capital when they're tied up in these mortgages for 10, 20, 15, 30 years when they're low interest rates. But during COVID, the interest rates were lower than what they are now, I recall. So if they sell those assets to the government takes on that debt. That debt is like having a credit card, having a balance carrying money. So that would increase our deficit. We would free up those assets from those companies, take on their debt. We take on their debt. And then they get cash, and those companies will speculate what to invest that money in. Maybe some of them will use them to write mortgages at a higher interest rate. So they make more money sitting on those mortgages than what they're making with the ones they wrote back during COVID. Good for them, and shame for the U.S. citizens, taxpayers that will get the negative return on them. Yeah, corporate welfare helping the big financial institutions. Now, twofold, they're speculating that will encourage more people to buy homes. Well, higher interest rates typically don't encourage people to buy homes. Job security and value of investing in a home, if they speculate it's a value. My neighborhood, there was a home on the market for a few months, listed at $700,000. The owner inherited, I guess, from family members. He didn't live in it. He marked it down a few months later to $500,000. He marked it down $200,000 less than it was listed. He had a contract on it. People were pending to buy it. They did a home inspection. This buyer's home inspector came back, said the home was worth less. So the contract broke, all legal, and the home is back on the market. The seller is still listing it $500,000, where the appraisal came in for less than that. Yeah. I seen that home. I understood it before it was on contract that it was overvalued. So that's some information just to share with you about real estate, mortgages, and how the public taxpayer is going to get the short end of the deal again. Not good. Okay. Finishes off materials. Look at that. Took out the highs of last year. Outstanding. Still shy of that. So those are the sectors of the S&P 500. Big difference when you look here on the watch list, again, just showing you the day. Point is, they are not performing the same. You see who the leadership is. The ones that are making all-time new highs and which the stock index is. Thank you as always spending just a little time with me. That's it for the video. Thank you for watching.